Hello everyone, welcome to the channel of Qianmo. Today we're going to talk about trust. Trust may appear to be relatively less known compared to companies as a business or investment structure. That is probably because you haven't earned your first $1 million yet. One day when you become a millionaire or a billionaire, believe me, you will find how important a trust is. Allegedly, here is how trust is originated. Long time ago, back at the time of Crusades in the Middle Ages, when a landowner left England to fight the Crusades, he conveyed his ownership of his land in his absence to someone else, maybe a friend or a neighbor, to manage his wealth. Obviously, he would thought that the ownership would be conveyed back to him on his return. But surprisingly, yet not so surprisingly, they often encountered refusal to hand over the property upon the return. Luckily, the court recognized the claim of the returning crusader and ordered the acquaintance to return the wealth back to the crusader. The acquaintance was trusted to hold and manage the wealth on behalf of the crusader, for the benefit of the crusader as well as anyone else the crusader wishes the benefits to go to. Over time, this developed into what we know today as a trust. Although this story is coming from Wikipedia, it does make sense. There are three major roles in setting up a trust: the appointer, the trustee, and the beneficiaries. So, in this story, the crusader is the appointer. The acquaintance is the trustee, who has the legal title over the wealth, however, not receiving any benefits unless he's a beneficiary as well. And the beneficiaries are whom the trust is set up to distribute the benefits to. For example, the crusader himself and his families. It looks like a simple structure, isn't it? But this simple structure can serve multiple functions. In this video, we will roughly introduce a few. First, asset protection. Trust is a very effective vehicle to separate and protect your assets. One of the examples to illustrate this may be Murdoch's divorce with Wendy Dunn. Despite the divorce, Murdoch's News Corp was not affected, nor did the wealth that was to be distributed to his other children. This is due to that the majority of his News Corp shares are securely protected in Murdoch's family trust. The trustee, rather than Murdoch himself, is the legal owner of the assets in the trust. No other person can take any assets from the trust unless they are the beneficiaries or the creditors of that trust itself. Obviously, asset protection is not only for divorce, but for many other occasions as well, including protecting the most valuable assets in your business, for example, intellectual property, etc. Second, tax efficiency, which means you don't have to pay extra tax where you don't have to. If you have billions of dollars, for sure, those assets will generate return every year. And as expected, that return would normally be quite large. You probably would think, well, I can't use up all the money myself anyway, and I want to share my wealth with my family. For this reason, many rich people set up a trust and let the trust hold those wealth. In that way, the trust can distribute the income to the beneficiaries, for example, your wife and your children. Then those income become theirs rather than yours, and many times they may not be earning as much as you do and have a lower tax rate because of that. Third, estate planning. Following the above example, if the rich person would like to be rest assured that after he passed away, his children have enough money to live by, however not wanting his children sit on too much wealth and not doing anything, trust comes quite handy in those situations, as you can decide that for the rest of no matter how many years, each child is to take from the trust a certain amount of money every year. Your professional trustee will manage and execute per the trust deed even you're not there. Fourth, confidentiality. This may not be mentioned often, but in most countries, normally the public can check some basic information about a company. For example, who the shareholders are. If a trust owns that company rather than an individual, it would only be showing the trustee's name. For this reason, some celebrities may choose to set up a trust if they do not want the public to know that they are holding an interest in a private company. Okay, we've had a very simple introduction about trust in today's video. See you in the next video.